Hey, good morning. It is Wednesday, EIA and FOMC day. So the market and crude might get a little bit busy this morning, but the indexes are probably going to just stall out until the announcement. I want to show you the daily charts and where we are on value, above and below value for the respective markets. Crude is again below the yearly value. And to show you how low we are from last year, here is last year, way up here in the stratosphere in the hundreds. So this time last year, we were way up here. And we have not returned. And we tried to get up to the previous value low, but didn't quite make it. And I thought for sure that we were going to do that, but it did not make it, and it came back into value, and it has continued falling. But look at the Bollinger. The Bollinger is not moving down. The Bollinger is still sideways, and we're at the value low. So that tells me that this is a buy. Okay, I'm probably the only person to tell you that, but I'm sure there's a lot of market participants that are going to be pushing this back up to the midline and to the point of control. Certainly this air pocket here could probably get filled in, and then that would push it up. That's not to say that the low is not going to get tested, but I just don't think it's at this point in time. There's nothing different in the market that would propel it to go that low. We know that we're oversupplied situation, but the oil companies are doing things. The Baker Hughes rig count shows that rigs are coming offline. We had a major oil company just announce, Shell, that they're abandoning several fields, their shale fields in the Arctic. So their response appropriately is being taken until we get through this low patch. So I would imagine that we're going to be getting back into the value area. So when you see price below value, that's the time to buy. So you might want to be looking at some options or be keeping your eye on when price gets above a daily VWAP, like it is currently, trading above the previous value, and it'll probably come up and try to check this lower value area, trade up into this zone. If we don't come back, and it looks like we're going to be testing the VWAP, so we just are going to check the open, but we are currently a buy. We're below value. So I know a lot of the institutional players will be looking at this as a buy, just saying. So I will be looking for price to come back into this area at least to 67.53 and 84.59. That's your previous point of control for last year's value, and the previous value low, which has not been even hit all year. So I know that there's a lot of Fibonacci traders out there. So if you were to do a Fibonacci, we're below the 50% mark. So we could see this ranging, but I would imagine that the 4150 would be a bounce area for us to just start ranging up and down until we can get a reversal. Let me change this to the That's scary. 31.46 would be my bottom. 69.26 would be the top. So it could be that we hit 31.46 and go back up, but I doubt it. We're going flat sideways right now. So I want to also show you how to put momentum on the chart. So let's see what the momentum is doing. The Bollinger Bands are flat. And how to add momentum is to add your momentum indicator to the chart. This is the standard momentum. Put it on a 1 period, and then change your input series. Click the ellipsis. It takes a minute or two for that to pop up, but a box will pop up. There it comes. And you change it to indicator. Scroll down to get your EMA. I use a 20. And then you do another smoothing. So click on the daily again. Click that pop up. Again, it takes a minute or two for it to pop up. I don't know why. I guess it depends on how much you've got going on with your processing speed. And then go down to EMA again and choose 5. So this double smooths the momentum. Does not mean that you're getting lag, okay? It just means double momentum. So you can see that we are in the downtrend by the slope of the EMA, the slope of the momentum indicator. However, we are nowhere near the momentum that was seen on the first leg down at all. There is a huge amount of divergence. That is huge. So when you see the first up bar inflection on momentum on your continuous daily contract, buy an option. What the hell? Right? That's what I'm going to do. So here is our divergence. So we're in a downtrend and we're below value, and price is currently moving back up towards the yearly value line. So we'll see if it gets a bounce at 43.84 or pushes up into the value or inflects. That's going to be the decision location, is 43.84. We're currently at 43.22. All right, so let's look at NASDAQ. NASDAQ hit the 5,000 mark again. Here's my doji. Here's the big gap up on the PBOC and the euro. And we're just grinding up. And here's the previous 46.78, and I've got the top of the world up here at 47.58. 56. Excuse me. So I don't know how much juice is left in this, but we are way up here riding this Bollinger Band. Again, stay with the grind up and wait for that first inflection to come down opposite, and then buy a contract short. Let me change this to the just save this as the daily. Let me open up my other template, another chart on the continuous contract. Okay, so here, let's look for the previous values. Did I put enough data in here? No, I need to add some data. So here's the previous point of control that was taken out from last year. So you see how this works? So here was last year's value, and you see how price responds to it just like a daily market profile. See how price came down and you see the divergence? And if you buy an option on that first momentum tick up, then price goes all the way up. So here we are again over bought, but still ticking up. You know, if the market determines that the Fed's not going to do anything until March of next year at the earliest, there's really no reason to not think that this can't go and hit 5,000 again, even though the data does not support it. And that's what I can't wrap my head around. The data's not there. We are artificially engineering this market, and that bothers me. The Fed knows that. So, but what the hey? It's just printed money anyway, right? Okay, so here is the NASDAQ, and there was the crude. Let's just, for grins, look at gold real quick. And we are sitting on last year's value low. We came up to last year's open and reflected back to the value high, and now we're making another push up away from the current value. So we're making a beeline to 1220 is my guess for gold. I would like to see an inflection back up. We still haven't. We're still in this down slope, but if we get another close high today, get above 1180, I'm sure we'll have that inflection. So just waiting for this upside inflection on gold. But 1219, 1220 looks like a very strong probability trade for gold. Thank you. Y'all have a great day.